penny to the penny, again and again. I mean, right off the lines, it's all technical. And then for the first time, we have come out through the top. I think there's more to go. So if you had to be long or short, I want to be long here.
Carter comes over.
Wow.
Come on over, Carter. Brian will bring it
for 08, just sit there and just
sit there
around.
Like squat. You're a squatter.
He's got his summer coat on, too.
It's kind of linen-y, silky maybe.
So new format. If you haven't realized, my videos keep getting flagged, so I have to come in here and make some comments. Hopefully this won't get flagged. Let's go ahead and let the video continue.
Okay, so Carter, in your initial chart, you showed all of the drawdown. Does it matter that earlier in Bitcoin's history, the liquidity was so much smaller, the market cap was so much smaller than what it is today?
Obviously, the stakes are higher now, right? At one point, it was an unknown thing and just sort of a few people playing. Now it's considered an asset to some people, right? Other people think, again, it's a fraud or a Ponzi scheme or nothing. But what we do know is that if it were really going to top here, we would be forming the other side of a shoulder.
Once again, they're going off of charting, which you can totally do. I brought up in the past that, and they did bring up the great point that just because a coin flips heads 50% of the time doesn't prevent it from flipping heads 10 times in a row. So be very, very careful. Nothing against charting. It's obviously good to know, but it's definitely not an oracle. No one has a crystal ball.
Typically, you get head and shoulders up, and that's not what that pattern suggests. And the day-to-day strength in the face of market weakness is sort of interesting as well.
So, Carter, when I look at the S&P, I could draw
exact same way.
And so to kind of go into this further, why they're recommending this buy is obviously it hasn't gone below certain averages. So now they're saying, oh, like this is a clear sign for a bull market. And what I've recommended, and if you've been watching the channel, is just dollar cost average. I've been dollar cost averaging since I thought the beginning of the dip was early January. So when we first hit not even like under 400 billion, I started buying. And as the market cap went lower, I just increased my buys. And now that the market cap is up to 430 billion, I'm not making as many purchases because I've already made significant purchases under 300 billion market cap. Now I'm still going to dollar cost average and still make purchases into this market, but very small amounts compared to what I was making when the market cap was under 300 billion. And I highly recommend, if you haven't, go get an account, go get Coinbase, Gemini. If you're going to do small transactions, do Robinhood because it has the lowest transaction fees, and the links are all at the bottom of this video if you want to go in and sign up. But definitely, it looks like we're out of this bear market, or what they're signaling. I'm still prepared. I have orders to buy below 250 billion if it hits, so I do have a good amount of cash socked away for those kind of orders. But if there's anything I can do to convince you guys, especially now that we've hit the 10,000 mark, go get an account, put in $5, $10, $20, whatever you want. Stop being a lurker. Get into this market, and you don't even have to buy right away. If you want to buy a smaller amount, go for it. If you want to buy maybe a week from now, 2 weeks from now because you're still uncomfortable, whatever. Just get your account set up and be ready to buy some sort of crypto because I made the prediction, and I'm very confident with all this media hype, we're going to hit that trillion dollar market cap. So please don't miss out on it. And if you are going to miss out on it, then continue to follow, continue to educate, and I will talk to you guys soon.